Welcome to Unlocking the Hidden Value of Your Life Insurance with Mrky and Rob Haynie from Life Insurance Settlements. This show is designed to help retirees and their advisors understand the basics of a life settlement. In this podcast, we show you how to get more from the sale of your life insurance policy versus lapse or surrender, and how using life settlements can increase assets under management. Mark and Rob ignite conversations on how to look for opportunities and navigate the life settlement process so you and your clients can enjoy a comfortable retirement. Now on to the show.
And welcome to Life Settlements, Unlocking the Hidden Value of Your Life Insurance with your host, Mrky and Rob Haynie. This, for those of you who just turning in, maybe who have never heard the podcast before, is actually the second part of a fascinating conversation with with the founder of the life settlements process and industry, if you will. Rob and Mark, good to be with you again. Fascinating first part of the conversation. I can't wait to hear what comes next.
Myself as well. I think Mark has the first question.
Yeah, appreciate you having us back, Alan. Thanks for joining us again. You know, Alan, you brought up on our podcast that just led to this one a very, very important fact. And it's something that I hope every listener just listened to, is that your company and other companies like you who buy life insurance policies in what's known as a life settlement, that you give that consumer 5 times more than what the life insurance carrier's cash surrender value might be. And our industry averages do say that most of the time when someone enters into a life settlement, that consumer receives anywhere from 3 to 7, 3 to 8 times more than what the insurance carrier would have given them, which is outstanding. You would think, why wouldn't anyone do that? And my question is, you know, we have, and these are very real numbers, we have 500,000 policies that end up in lapse or surrender every single year. And that's just on seniors. That's folks 65 and older. That's who enter into a life settlement typically. Yet our industry, the life settlement industry, Alan's group and other buyers like him, they buy around 4,000 to 5,000 policies. So you have this giant disconnect. You have 500,000 policies lapsing every year on seniors or being surrendered. Yet our industry only gets the chance to buy around 5,000. Why do you think, Alan, now that I'm getting to my question, why do you think there's such huge disconnect? Because we hear it all the time that 90% of the time when a client lapses their policy, surrenders it, no one ever told them about the life settlement option. Why do you think that might be still 25, 30 years later since you've been in the marketplace, Alan?
Well, I think it's a combination of factors. But before I get into specifically my view of the answer to your question, I just want to reiterate what we said in the first podcast, and that is a life settlement is the sale of a life insurance policy when somebody no longer needs it or no longer can afford it. Usually over 65, generally in the average age in the 70s. As an aside, I would say that if they can still afford it, they should keep it. If we want to buy it, it's a good investment. So I'm a strong believer in life insurance. I spent my career in the life insurance business. Having said that, you've asked a critical question. Why aren't more people taking advantage of the opportunity, the choice, the option to settle or sell their policy instead of lapsing it? Because a large percentage of those seniors that are lapsing their policy would qualify for a life settlement, which is to say would qualify to get some multiple of what the insurance company would give them. And if it's a lapse, the insurance company is not giving them anything. So anything they get would be a tremendous benefit. So the answer is twofold. One is on us, is on our industry, and that's education. That's what we're doing here today. That's why I'm pleased to be given an opportunity, because I think the option for consumers is so great. But we, as an industry, need to be relentless. It has to be 24/7 where we're educating consumers. I've spent the last 25 years doing speeches around the country, educating estate planning counsel, insurance agents. And I realized, although we had a lot of success with that, in dealing with educating attorneys and accountants and life insurance agents and wealth advisors, et cetera, that it wasn't sufficient. So in 2016, we started advertising directly to the consumer, much to the skepticism and criticism of a lot of people in the industry because they didn't think the economics would work. Well, now, 6-7 years later, the economics do work. But more importantly, we get a lot of agents calling us, and I know Rob and Mark, you get consumers and agents calling you because not only are the ads educating consumers, they're also educating agents. So, and now we have one other company is doing the same. And instead of being concerned about the competition, I'm thrilled because as you've heard me say over the years in different speeches I've given, the old Ronald Reagan line, a rising tide lifts all boats. Our ads helped everybody in the industry, and it helps consumers to become aware of it. So it starts with education, and we need to become more and more sophisticated in digital, social media, TV, radio, in any place to get the message out. The reality is, young people who buy life insurance, they could hear our ad 50 times. It won't mean anything to them. Mm-hmm. People buy life insurance because they're in a state of flux. That's what you're taught as a young agent. So you want to find people who are just married, who just bought a house, who has children going off to college, people who have who are going through a life change. The same thing is true when people sell their policy, if they know about the opportunity. So we need, as an industry, to be educating people, especially if they're in a period of a change in life, to what a life settlement is, and what it can do for them. There's a second reason, having said education, we as an industry are doing a much better job of that than we were doing 5 years ago and 10, 15 years ago. We can do much more, but we are doing better. The second reason is we've got carriers who really don't like the settlement option. They see it as a zero-sum game. If Coventry buys a policy, that means it's going to stay in force and they're going to be paying a claim. And although I've used a line for years that's really strange, and I didn't think this way when I sold insurance when I was a life agent, but I've used it many times since we started in the life settlement business, that insurance companies are not in the business of paying claims. They are in the business of collecting premiums. And they plan for, it's their business model for those policies to lapse before a claim is payable. Only a few percent of policies will mature. That means the insured has died, but it's a much better way of articulating it. Only a few policies mature before the insured is over 65. And for those that are over 65, a large percentage of them are what the insurance industry refers to as orphans, orphan policyholders. And they're assigned to young agents at carriers. And most of the time, the agents don't know what to do with them because the people have already bought insurance. But the one thing that agent is prohibited from doing by the largest carriers in the life insurance industry, they're prohibited from assisting a client with a life settlement. So for those people who are listening today, if you've got insurance with Northwestern Mutual, with New York Life, with State Farm, And I mention those three for a reason. They're the three life insurance carriers that have the most amount of life insurance in force, which means they have the most amount of life insurance on individuals over age 65 who would qualify for a life settlement. And each of those carriers prohibit their agents from discussing it, from assisting a client. And in fact, that agent who does assist, it's the policy of these companies to terminate those agents. And they have a lot of leverage over the agent because they provide retirement benefits and health insurance benefits. And there's an irony here. And it's one that I'll tell you, and it's something I'm really proud of. The life insurance companies in the late 80s and early 90s, many of them were sued for selling a concept where the premiums were supposed to vanish, but they didn't. The premiums, interest rates were such, interest rates came down, were at a certain level, they came down, and policies that were supposed to be paid up weren't paid up. So instead of the premiums vanishing, the agents vanished. So there was a lot of class action suits against the carriers. And if you look it up online, you'll see multi-billion-dollar settlements with some of the carriers. So the carriers got together and they created an organization called IMSA, the Insurance Marketplace Standards Association. This is a long way of explaining how much I think the carriers fail their customers. The Insurance Marketplace Standards Association was an organization to remove the taint that the carriers had because of their marketing practices with these vanishing premium concepts where premiums didn't vanish. And they had 6 principles. And this was, and companies had to apply for membership and be certified. And the first of those 6 principles was to provide assistance to their clients that they would want to receive themselves, to engage in fair and active competition. Well, the irony is that they don't provide advice that they themselves would receive. If I had a former life insurance company executive who's now 75 with a life insurance policy, and he could sell it and he had real value in it, he may have spent his career prohibiting his agents from providing advice on it, but I can tell you he'd sell it because we bought it from some of those executives years later. But they prohibit it. They're not providing customer-focused service. They're not providing the same kind of advice that they would want to receive. And what I'm proud of, how I started this, is about 13 years ago, 12 years ago, all of a sudden IMSA disappeared from the internet. The principles disappeared. And a new organization was born, whose name I can't remember, and the initials aren't as easily said as IMSA. But I did some research. And the same individual who was the head of IMSA was the head of this new organization. And the same address that IMSA was at was the same address as this new organization. So I'm proud of the fact that I would give speeches all over the country and say the carriers are hypocrites. And they heard me. But instead of ceasing their bad actions, they just ceased their communications that demonstrated what hypocrites they were. They're making a mistake. They made a mistake then. They're making a mistake now. And so given this forum, I'll take 45 seconds to say why. Life insurance agents or life insurance companies going back over 100 years took the position that borrowing your cash surrender value from your life insurance policy was immoral and unethical. They were wrong, and they came to use it as a selling feature that in a case of emergencies, you could borrow against your cash surrender value. But for years, their position was it was immoral and unethical and against the basic fundamentals of life insurance. Well, that's the position they took with cash surrender value. They took the same position with mutual funds. When I entered the life insurance business, and it was a few years ago, as in 1972, if I got licensed to sell mutual funds, my carrier would terminate me. How ironic and stupid in hindsight that is, because all of the major carriers, and I mentioned 3, they're all in the mutual fund business, and they also sell variable annuities and variable life insurance products, which are essentially annuities inside insurance-related products. They didn't understand they were in the asset business. And as it relates to life settlements make insurance more powerful, more flexible, and more valuable. If I was the CEO of an insurance company, I would say I'd make some adjustments to my products, but I'd still be my products would be competitive, and I'd say to the agents, when you're selling this insurance in the very beginning, you should be explaining what one of the possible exits is. It's a more value. It makes life settlements make insurance more valuable. And yet you have an industry, and you have the 3 largest companies in the industry saying you're prohibited and we'll terminate you. They're not serving their clients. And it's part of why it makes educating consumers, to go back, Mark, to your question. Why don't more people know? Well, yes, it's education, but it's also prohibitions. So without going into details, I will tell you that I have in the past, and I continue behind the scenes to encourage, incent, and disincent carriers from continuing this type of behavior.
That was a great answer. And I think you almost answered another question I wanted to throw out there, and the answer would be time. You just talked about how insurance carriers used to prohibit this, that, and the other. And you've got 3 of the largest that still prohibit life settlements. Yet if they just, and you said this, if they just looked at our industry and realized if they're sitting down at the table with a 25 or 35 or a 40-year-old family, that you can say to that family or that male or that female, whoever it is, hey, you can buy my life insurance policy now from me. Yet when you hit 65 or 70, if you don't feel you need it, the very reason you're buying this policy from me today may not exist when you're in your 70s. Well, guess what? There's this life settlement industry. And I've always thought, and Rob and I have talked about this, if carriers just came to that realization that they almost have this sales tool, a life settlement, to help them sell their products. Yet, Alan, you just mentioned it, 3 of the largest insurance carriers will absolutely terminate their employees if they mention a life settlement, which, to me, and I give talks like you do and webinars, and it infuriates me when I have to talk about, and someone says, well, hey, I can't do this. I'm with so-and-so, or I'm with so-and-so. And I say, well, explain that to your client then. Explain that to your client that they could lapse their policy today, yet there's this thing out there called a life settlement that might give them 5 to 7 times the carrier's cash surrender value, but you can't tell them about that. So I've always wondered is litigation going to come one day, class action lawsuits, or is it just going to be timing where all of a sudden these carriers realize, like you said, in the past, they didn't like mutual funds and they didn't like borrowing against cash surrender values? Will they come to the realization that, you know what, life settlements aren't as bad as what we thought, and if we were smart about it, we'd use them as a tool to sell more life insurance? So that was a great answer you provided there, Alan.
Well, I'll add to that. So recently, in the last couple of years, and I honestly say it's because of the awareness vis-a-vis the television and Sirius, the XM radio, people are coming up to me and saying things like, I've heard about this on television. I want to learn more about it. We're going to broker-dealer conferences that were once banned the product altogether. They're now coming to the grips of the realities of that, we've got to cover our rear end, so to speak, and make sure that people understand that you can sell your policy at some future date and time. The shocker this year was my last day of vacation. I got a FINRA notification that they were talking about life settlements, and I thought my eyes are already bad. I thought they were getting worse, and I said, I can't read this correctly. I think FINRA is saying things I should know about life settlements, and I read it, and I started to think out loud to myself, rather, that there had to be a reason that they're putting this out there to the RIA world, the broker dealer communities, to say life settlements are here and you should be paying attention to it. So at the last conference I was at, one of the guys that's head of compliance said to a group of people, literally said, look, we buy E&O because we have to. We don't want to buy E&O because we have to use it. And he says, you get a life settlement comes across your desk, you know what to do. And that's after I give a little presentation to it. So I can see the tide churning, but I see it's going to be a long road of continuation, if you will, of more advertising, better, smarter ways to work on the internet, social media, et cetera. But I do think the change is coming. And with that, Alan, I have another question, because that was the best answer I've ever heard in my life. And we'll probably play that back 6 or 7 times to hear it again. One of the things you did early on when I sat in the audience, and I didn't really know you that well yet, you started to talk about the importance of regulation and paying attention to the regulators and legislation and constantly being aware of what's happening. This is back in the days we might have had 6 or 7 states that had given some type of indication they were either going to write a law. I think Florida and California and another state had passed one. And you said, no one will take us serious. And you spoke for all of us if we're not taking ourselves serious. Can you expand on that? And then kind of, as you end that conversation, kind of break into some of the future situations we still are battling in and something you see over the horizon? That's okay? Sure.
When I came into the industry, the first meeting I went to was of the old Viatical Association. That really was lost, didn't know where it was headed. And it was in the basement of a hotel in Fort Lauderdale. I'm sure you remember that meeting. And I would say, other than the two of you and maybe 4 or 5 other people, there isn't anyone still in the industry that was at that meeting. And in fact, as I walked to there were tables set up in a big square. As Connie and I walked to sit down, somebody whispered loud enough for me to hear, "There's a businessman here." That's one of my fond recollections. I don't know how I was identified as a businessman, maybe because I had a suit on. I don't know, but I was identified early on as a businessman. Which made me curious as to who else was in the room. But what became apparent early, because the Viatical business post the new drugs that treated it so effectively really became, sadly, an industry with a lot of bad actors, routinely described as the Wild, Wild West. In national publications, death bonds was a phrase that carriers used to like to talk about. And I concluded that we needed to be regulated. And I have this philosophy that if you're in the financial services business, that the only thing worse than being regulated is to not be regulated. In our case, we're all regulated by 51 different regulators. That's the 50 states and Washington, D.C. And it's a pain in the ass. If we comply with a case in one state, we can be breaking the law in another state. So it's a minefield. But it's a far better position to be regulated than to not be regulated. And as evidence of that is the carriers fought us with respect to getting legislation passed in different states because, and I know this because I have the minutes of ACLI meetings where this is said, we'd rather them not be regulated so we can tell our producers that's not a regulated industry, it's a bad industry, you can't participate. So in those days, we were fortunate. We had more capital than anyone else in the industry because of our relationship with AIG. So I made the judgment to invest and mandate that our company, representatives of our company, which would include me and a government relations person and local counsel, would meet with regulators in at least 40 states a year. So we fought the carriers and we fought many people within the settlement industry to become a regulated industry. And now approximately 92% of the country is regulated. And we're regulated and we have extensive reporting and licensing requirements and E&O requirements. And that makes us a far more credible industry than if we weren't regulated. There was a second part to your question, but I think that's principally.
Well, the next thing is, talk about that investment you made, which we all literally benefited from far in excess of what we're benefiting from the television commercial, in my opinion, because without that, we wouldn't be here to even see the television commercial, was to talk what you've been proactive in helping the industry fight off different attacks, the most recent being the enhanced cash surrender value attack that I know you've kind of been at the forefront of, along with Nat. Tell us a little bit about that fight, when you first saw it and how you feel it's going.
Well, what, Rob, you're referring to is carriers who issued policies that economically were not sound. And at the time, this genre of policies, which had certain guarantees in it, made no sense. A simple arithmetic would tell you that they were selling the insurance for too little money. So carriers have taken hundreds of millions and in some cases billions of dollars of write-downs because they underpriced their products. So as a defensive measure, they've come out with something they call enhanced cash surrender value, where they're approaching their policy owners to buy back their policies for more than the cash surrender value. That's what we do. I don't blame the carriers for doing it with this caveat. They should have known better in the first place because they underpriced their products. And at the time they did it, and I'll bring up Northwestern Mutual again, Northwestern Mutual's chief actuary said, these companies can't afford to do this. And if they do this, those policy owners are going to go to the secondary market, which that isn't a good thing. So he predicted it and he did it over and over again. But the answer to your question is Coventry and the trade association, the Life Insurance Settlement Association, LISA, are fighting the carriers with respect to their efforts. And we're achieving success as of this week. As of Tuesday of this week, there was a hearing scheduled for yesterday in one state where the carrier was challenging the state's disapproval of their form to do this enhanced cash surrender value. And at the last minute, the carrier said, let's hold off on the litigation because it was going to court. They said, let's see if we can have a conversation to resolve it. I translate that as meaning they knew they were going to lose and they didn't want that on the court record. So we're making real progress. I don't think there's anything wrong if the carriers want to work with your company, our company, or other companies in the settlement business to assist them in reducing their liabilities. But there's a regulatory framework in place, and that framework revolves around life settlement brokers and life settlement providers. And unless they want to become a broker or a provider, they need to get in line and work with us.
Perfect answer. I think we've reached the end of our time, but I just want to give Alan an opportunity. If there's anything else additionally you'd like to say, add something we didn't ask you, the floor is yours.
No, I would just reiterate that we need to be telling our story. We have such a good story. The reason we were able to take on the life insurance industry and win in the legislative arena throughout the country, and that's after we had losses. We had multiple states that literally prohibited life settlements. We had multiple states that prohibited life insurance agents, not carriers, but life insurance agents by state law from assisting their clients. The reason we got those bad laws reversed and other laws, good laws passed almost nationwide, I mean, literally 92% of the population, was because of the value we provide. We provide real choice, real benefits for people to maintain their standard of living in retirement, to add to their retirement income, to help with their long-term care costs, their medical costs, to give that gift to their children or grandchildren or take a trip or whatever it is. That's real value. $5.4 billion from our company alone, and there's 19 other companies. That's something that provides me with enormous pride. And for us, for me, in terms of my career, but for you guys and everybody who's in our business, we're helping people every day. And not everybody can say that.
Perfect ending. Bill?
Yeah, that is a fascinating conversation, especially for someone like myself. I'm not going to lie. I'm not familiar with this topic. And this introduction to it has been really enlightening. Before we go, I just one of the things that has always been on my mind, and maybe, Alan, I'm directing this question at you, is, when I was sold life insurance when I was much younger, I was like, hey, and I couldn't see the value of doing it. And something you said in the course of this conversation struck me as interesting. If someone had said to me, well, I'm going to sell you this product, it's a life insurance product, you understand that part of it. But you should know that when you reach 65, it has a different kind of value that you may choose to opt into if you want to, but you don't have to. I think it would have made the product more attractive. Education is right, but would it fundamentally change the life insurance business if they said to you, hey, Bill, you can buy this product now for life insurance reasons, but when you get much older, you may want to choose to exercise its value in a different way?
It would add a few pennies to the premium. It's not material. But unfortunately, too many insurance company executives manage looking in the rearview mirror. And like the general that fights the last war. And the history of the life insurance industry, and I feel I can talk about it with some authority, as I've got a library of almost 500 history books of the life insurance industry. There's not a lot of people that can or would even want to say something like that. But it's an industry that really is not innovative. I'll end with this line. And this was a line I heard as basically a rookie life insurance agent. It was maybe my third year. I had sold enough to go on a trip that the insurance company promoted if you sold enough.
Yeah.
And there was what I called an old home office drunk. And what he did is he sat in the bar of the resort all day long. And as people would walk by, he'd say, hey, come in. And he'd engage in a conversation. And this is a true story. And he'd slur his words because he was in the bar all day long. And I remember this fella, and I won't mention his name, although he's long gone, but I but I'll say his name was Art, and that was his first name. And I had then and have affection for him. And he said to me one day, insurance companies have to be dishonest to lose money. They've tried stupidity and it hasn't worked. And that's coming from somebody who is a very strong believer in life insurance.
Right.
We just need better vision on the part of life insurance companies executives, and then they'd be doing more for their customers.
Thanks. Interesting. Thank you,
Alan. I just want to say that I've enjoyed this thoroughly. I say to people quite some time, for all the time that I've been in the business for close to over 30 years now. And every time I listen to you talk, I learn 2 or 3 new things. So for that, I want to thank you.
Absolutely. Always informative, always insightful. And I don't know more that I could add, but Alan, much appreciation for you jumping on this podcast. And, as I always say, there's so many of these life insurance policies out there that end up in lapse or surrender. And what you said is, we do need to do a better job of education, and there's a better job on the carrier side of accepting what we do. So thanks again, Alan. We do appreciate it.
You're welcome. And if anybody's listening, Rob and Mark are 2 of the best people in the country in terms of advising clients on life settlement opportunities. I'd encourage you to give them a call.
And that seems like a perfect cue for me to ask Rob and Mark to tell the listeners how to get a hold of you guys if they want to have a conversation about this.
Mark, I'm Rob Haynie. Obviously, call me on my cell phone, 954-599-4433. And my email address is rob@lisettlements.com. Of course, it's listed on the podcast at the bottom of the page. Mark?
Yep. And my name is Mark Mrky, as everyone says, Marky Mark. And you can always reach me on my cell phone. Everyone knows that at 954-326-9378. We do appreciate everyone listening in to these podcasts.
We do indeed appreciate you listening. Guys, thank you for facilitating this conversation. It's fantastic. For those of you who have not subscribed yet, who are listening to the podcast, hit the subscribe button. You won't miss an episode. You won't have to think about missing an episode because it gets delivered directly to wherever you listen to this, be it Spotify or anywhere else for that matter. Thank you for listening. On behalf of Rob and Mark, I'm Bill Tucker, urging you to do not wait. Go out and live your best life now, today. Thank you.
Thank you for listening to Unlocking the Hidden Value of Your Life Insurance, the show that helps you unlock the hidden value of life insurance. Click the follow button to be notified when new episodes become available. Visit our website at www.lisettlements.com or give us a call at our office line at 866-326-5433, extension 1017. You can also directly contact Mark Mrky at 954-326-9378 and Rob Haynie at 954-599-4433.